start. So good morning, everyone. My name is Inga Stankaitė, and I'm a third secretary in charge of economic and political affairs at the Embassy of Lithuania in South Africa. I'm very pleased and honored to welcome all of you today to this first Lithuanian South African FinTech business webinar discussion organized by the Lithuanian Embassy in cooperation with the South African Financial Sector Conduct Authority. And before we start with the program, let me quickly just run through the housekeeping rules. So I would kindly ask everyone to maintain the muted mode throughout the session, except for those who will be speaking. And it would be, of course, very nice to see everyone's faces. However, for the purpose of ensuring the best internet quality that we can, so I will ask to only put the camera on for today's speakers and, of course, those who will be speaking at any time. And when we move into the discussion, please use the raise hand option when you will want to intervene or pose a question. And you're welcome to write the questions or comments on the chat at any time during the session, so we can read the questions in the Q&A session. And now let me introduce Mr. Dino Lazaridis, the FinTech expert at the South African Financial Sector Conduct Authority, who will be co-moderating with me today.
Thanks very much, Inga. Really excited for this session today and collaborating with you and Lithuania, and looking forward to a very fruitful discussion. Thanks.
Thanks, Dino. And to kick off, I'm pleased to invite His Excellency Mr. Dainius Junevičius, Ambassador of Lithuania in South Africa, for a welcome word. Excellency, the floor is yours.
Thank you, Inga. So dear participants, ladies and gentlemen, indeed, it's my great pleasure to welcome you at this meeting. Maybe some of you recall that a few months ago, the first remote meeting between representatives of Lithuanian and South African financial institutions and regulators took place. So today, by organizing the first Lithuanian South African FinTech business webinar, we are taking the second logical step in fostering contacts and encouraging cooperation between the entrepreneurs and companies of both countries. I'm very grateful to our partners from South Africa, Financial Sector Conduct Authority, and especially to you, Dino, and partners from Lithuania, Invest Lithuania, Bank of Lithuania, Fintech Hub, and Fintech Lithuania, who contributed to the organization of this event. Today, we aim to provide more information about Lithuanian and South African FinTech ecosystems to entrepreneurs of both countries, looking for new opportunities in each other's markets. You know, our countries have very innovative approach to the digital financial products and services. Lithuania and South Africa also similar in that they both aim to become regional leaders in the field of FinTech. They are similar in that they are like a gateway to wider markets too. Lithuania to the European Union, South Africa to the African continent. So, after these remarks and before returning the floor to Inga, I would like to draw your attention that our meeting is taking place around 2 weeks before FinTech in 2021, the most important international FinTech event of the year in Lithuania. And I would like to invite South African companies to participate in this event on October 21 to 22, or at least to spread information on it to those who possibly would be interested. The conference, I mentioned, FinTech in 2021, gathers companies, startups, investors, associations, policymakers, and technology leaders all over the globe to exchange knowledge and discuss the most challenging industry topics today. I will send the link to the conference's website on the chat. So I would like to wish you a fruitful meeting, and without any further delay, I give the floor to the next speaker. Thank you.
Thank you so much, Ambassador. And now I would like to invite Mr. Liutauras Žilinskas, FinTech Investment Advisor at Invest Lithuania, for a presentation of the FinTech ecosystem in Lithuania. Liutauras, please, the floor is yours.
Great. Good afternoon to everyone. Good morning. Can you hear me clear? Can you see me? Is the presentation on the screen?
Yes.
Yes, Liutauras, it's fine.
Great. Well, again, thank you to everyone here for this wonderful event hosted by the Lithuanian Embassy in cooperation with the Fintech ecosystem of South Africa. Thank you so much to the ambassador for the welcoming word and kicking off the event. So what I want to present today is how Lithuania's fintech ecosystem came to be, overview the main success stories of foreign companies establishing in Lithuania, and also look at some of the future trends. Now, I'll focus mostly here on the growth of the ecosystem, on the companies established, but later on, the regulatory side will be covered by my colleague from the Bank of Lithuania. Now, so the best start, of course, is to understand where and what is Lithuania and overview some basic facts and figures. So we are a relatively small country with a population of over 2.8 million people. And looking at some of the metrics of South Africa just before, I noticed that two Lithuania-sized countries would comfortably fit into the Western Cape province. So not really a large country by any stretch of imagination. So our employment rate is currently hovering at about 6%, and we have a steady GDP growth of about 3.5% year over year. Now, we're very happy to see that we're also an integrated country into the Western political and economic landscape, and we're members of organizations such as NATO, European Union, Eurozone, and OECD. Now, our country is also testament to political stability, with us being 10th in the EU, and also a really great quality of life. And finally, we also have a very favorable tax environment, with us being a 6th amongst the developed countries, the developed economies. Now, getting back to the main topic of today, the fintech, and how it came to be in Lithuania. So the story of Lithuania's fintech ecosystem began in 2016, when the fintech strategy was confirmed by the Bank of Lithuania, Finance Ministry, and Invest Lithuania, and it was a really great example of institutional cooperation and a testament to what can be achieved when governmental bodies align and work together towards a common goal. Up until that point, finance industry in Lithuania comprised primarily of legacy bank institutions which lacked competition from startups and challenger banks. Now, once the early companies, one of the early companies was Revel Systems, a POS provider from US, which started their technology office in Vilnius and basically kickstarted the whole industry in Lithuania. Now, in 2017, the new cohort program was introduced by the Bank of Lithuania to help up-and-coming financial technology companies evaluate their licensing potential and become participants in financial markets. With this program, companies such as Israeli Simplex, which was recently acquired by Canadian unicorn Nuvei, and the Singaporean unicorn company Num arrived and licensed in Lithuania. Then we marked the first specialized banking license issued to Revolut, which is currently one of the biggest fintechs based in Lithuania. That year, we also welcomed Google Pay, Railsbank, and Ajax. Looking forward, the Bank of Lithuania Blockchain Sandbox program was launched, where companies could test regulatory compliance on new and innovative solutions. That year also saw companies such as SumUp, Flywire licensed and established in Lithuania. Square Payments owned company Verse also began operations that year. And finally, last year, companies and unicorns such as Mambu and Curve joined Lithuania's fintech ecosystem, which reached over 230 companies in total. From institutional side, Anti-Money Laundering Center launched their operations, providing consultative guidance to market participants and training for staff. Also that year was a very special one, which saw world's first digital collector's coin released by the Bank of Lithuania, a testament to our regulators' continued innovation. Now, so all this work and cooperation led to immense growth. Right now, the fintech sector in Lithuania, which might be surprising to some, is the largest in the EU by the number of licenses issued. As mentioned before, we're currently numbering over 230 fintech companies in Lithuania, but we envision the sector to diversify in the future with growing number of companies providing core banking solutions, open banking providers, digital banks, lending companies, and crowdfunding platform operators, diversifying from the main payments and remittance sector, which is the most prominent in Lithuania currently. Now, why do fintechs actually choose Lithuania and successfully establish here? So each year we run an ecosystem survey, overlooking and asking why companies choose Lithuania for their expansion. Now, fintech-friendly regulation and infrastructure are named as one of the most important factors, as well as Lithuania's ability to adapt to business needs and provide the environment where fintechs can flourish. It is then followed by talent pool availability, and namely less saturated market for talent as compared to other Western European countries. Interestingly, personal relations also play an important role, and we are delighted to see that even in a small country such as ours, a really close-knit fintech community is always open to newcomers. And finally, target client market is an important factor as well. And well, despite Lithuania being a small country, it provides a great market for new participants to successfully test and launch their products. It's really much easier for them to access the customers and also benefit from the growing fintech hub by forging partnerships with other companies in the sector. Also, a really important aspect of scaling is talent. And I'm confident to say that one of the Lithuanian strengths is educated and driven talent. By our latest estimates, we have now over 42,000 specialists in internet and communication technologies, and we estimate that fintech sector already now has over 5,000 employees, with the headcount continuously projected to grow. And while we're very blessed to have our own language, we must say that it's well of little use outside of Lithuania. So naturally, we start learning foreign languages at an early age. As a result, where half of our population speaks at least 2 foreign languages, with English being the most popular, and that translates into 85% young professionals who are fluent in English. Then Russian, German, Scandinavian languages are followed as the most popular second choices. So as you can imagine, it's a really great asset for international companies that can hire multilingual talent here. And we understand that IT sector is very competitive everywhere, including Lithuania. So together with the current growth that we envision, we need to ensure a strong pipeline of IT specialists entering into the job market. Thus, Lithuania has positioned and has one of the most educated talent in Europe, with now over 55% of adult population having higher education. And specifically, higher education in IT is very popular. And we currently have more than 13,000 students in IT-related studies in the pipeline, and additional 2,500 junior developers constantly being retrained year over year by private academies annually. Now, the talent pool is further increased by Lithuanian diaspora returning to the country and foreigners who are very actively relocating to Lithuania at an ever-increasing pace. Now, let's dig into some of the success stories of the companies who have successfully expanded and established and are scaling in Lithuania. So we're very glad to say that we can host companies such as these in our ecosystem. And what I want to highlight specifically here is that each of them, with the exception of some yet, have significant product development and engineering in their Lithuanian operations, in addition to their license activities, which they passport across whole of European Union. Now, of particular note, here is an open banking unicorn, Mambu, who's a quite recent newcomer to Lithuania. However, they managed to already scale to 83 people. And knowing that it is mostly senior product-focused engineers, it's quite an achievement and showcases their robust talent market, especially that they achieved it in just over a year. And to laser focus and highlight a specific success case, the best example would definitely be Revolut. In terms of valuation, now only second to Klarna, we can actually trace Revolut's roots back to Lithuania. In 2017, their third largest market in terms of consumers was Lithuania, and Vilnius, our capital city, was important as they used it as a testbed to test their variety suite of products. And actually what followed was a very rapid expansion across all functions in their Lithuanian office. Now at over 220 employees, they envision further growth and scaling here. They also operate their banking license through Lithuania, serving customers all across EU. And now for the tea leaf reading part of the keynote. What does the future hold? So while we're very happy to have come this far and have built out a great ecosystem, we are not stopping here. So for future trends in Lithuania's tech and fintech ecosystem, we see two main developments. And so for the fintech side of things, we envision crowdfunding to be a really hot topic. This is due to a few key reasons. The main catalyst is the new European crowdfunding legislation that's coming into effect this November. So long story short on this is that the new European regulation will harmonize crowdfunding regulation across all of the European Union, similarly to how Payments Directive harmonized payments. So in practice, a crowdfunding platform operator established in Lithuania will be able to passport their license and export their services to the whole of the European Union, a trading bloc with over 500 million people. So currently, while nowhere near the size of the payments market, we envision that there is an immense potential for further growth in the crowdfunding sector. And recognizing this, the Bank of Lithuania has already adopted and streamlined their licensing procedures to suit the new regulation. And Invest Lithuania is, of course, welcoming all crowdfunding platforms to start their operations here. And now for the new and exciting development for the whole tech ecosystem in Lithuania. It's an initiative spearheaded by the Lithuanian government, the Ministry of Economy and Innovation. The program is called Collective Relocation. It's a program aimed at attracting innovative companies looking to relocate to European Union, Lithuania mainly, with the aim to create high value added job places. Now, collective relocation is a very highly beneficial procedure for both company and its employees, shareholders, and their family members. It creates an immense opportunity to relocate multiple people at the same time under simplified migration procedures without any actual additional requirements for the job qualifications. Some of the highlights of this is that employee will have a right to start working once he or she has submitted the application to the residence permit. It will be valid for 3 years, and that they can actually bring their family members. One of the most notable examples of such movements is the Wargaming Group, a company from Belarus. You might have heard of it, of a game called World of Tanks, which right now they actually position our capital Vilnius as a global hub for talent and scaling. So with this new influx of foreign companies, we envision a further growth of Lithuanian tech ecosystem as a whole in terms of the number of innovative companies and the talent that supplements them. And well, finally, of course, the talent proposition presented here definitely sounds great, but of course, it's not the full story. So don't just take my word for it of why Lithuania is a great hub for expansion and headquarters in Europe. Here is a collection of some of the well-known brands that have already successfully set up and are operating from Lithuania for the reasons I mentioned before. So it really is a very exciting and thriving community. And as Jared Isaacman, the CEO of Shift4Payments, after his visit to Vilnius notes, this city is a small version of Silicon Valley. And well, if that's not a testament to the tech ecosystem coming from a person just casually flying fighter jets and traveling to space, then, well, I don't know what is. So with that in mind, yeah, always feel free to reach out, and looking forward to other presentations from the Bank of Lithuania and Lithuanian ecosystem players presenting the local side of growth in Lithuania. Thank you.
Thank you very much, Liutauras. And I am now happy to call on Evelina Kvedaravičiūtė, who is the project manager for Newcomer and Sandbox program at Bank of Lithuania. And she will give a brief overview of these two programs to supplement what Liutauras has already outlined. Evelina, please.
Okay, thank you for the introduction. I hope you see my slides.
Yes, all is clearly seen. Thank you.
Okay, so thank you, Inga, and thank you, Ambassador and Liutauras, for such a great introductions and presentation. And I will continue, and I will briefly introduce our regulatory environment in Lithuania. So, as Liutauras mentioned, we have become as a Fintech Hub in recent years, and a lot of licensed market participants have entered our market. And we, as the regulator, change our approach for being like a watchdog to becoming a partner for new innovative business models entering our market. And the results you can see in the slides. We have 140 electronic money and payment institutions in the market today. We have 7 specialized banks and 24 platforms for P2P lending and crowdfunding. And what have we done to achieve these results? We have a lot of different initiatives which aim to boost fintech ecosystem in Lithuania, such as a newcomer program and the Regulatory Sandbox, which I will present today. But also we pay a lot of attention for risk mitigation tools in our jurisdiction, and we have established EML, Risk Mitigation Center. We have introduced the world's first digital coin, which we will, the experience gained during this project will be used for the feasibility analysis for digital euro. So we have a lot of tools to foster innovations and to smooth the licensing procedures for the new market entrants. So let me dive deeper to the newcomer program, which is dedicated for new market entrants. So it is the one-stop shop for fintechs and companies considering to be licensed in Lithuania. And during the program, we provide consultations for market entrants. We provide meetings. We look to their business models, and we can highlight some issues if it can come during the actual licensing process. Just to mention, we pay a lot of attention to risk-based approach. So for us, what is important, it's not quantity, but quality. But we believe that being a partner and providing consultations can help to achieve that quality in our market. So assessment process for new market entrants have become such as customer journey. You can find main documents and requirements in English. The application can be submitted electronically through e-commerce gateway. And as I have already mentioned, but we are focused on quality. So as you can see from this slide, we have this program is very popular, and we have a lot of participants, but we also have part of them which we need to say, which we need to skip. So participants should come prepared, and we can help them, but also they also play a significant role in their own success during the program. One of advantages joining our market is our central link system, which allows non-bank market participants to provide payment services in same terms as bank or credit union. So we provide the services for market participants to join European payment market. And we can see the results of this program. So our payment market is booming, and we have a lot of participants from almost all over the world. And as Liutauras mentioned, now our eyes also are on crowdfunding platforms due to this new European-wide regulation. We also are interested in tech companies and wealth tech companies, because we believe that the developed payment market can help to create network effect, and that we could grow even further. Another initiative which we have implemented is the Regulatory Sandbox. Regulatory Sandbox can ease the implementation of financial innovation, and the firms can test the new business model during on the watch of the regulator. So this means that the firms can implement never before seen ideas, and we as regulator can mitigate the risk in the very early stages. Especially the regulatory sandbox can be used when the regulations are unclear or insufficient. And the main criteria to join our regulatory sandbox is our genuine idea. We also seek for customer benefits. The idea should need a testing, and it should be able to test the business model, so participants should pay an attention for testing plan. And also we have one condition, that participants should be willing to provide services to Lithuanian market, because benefits for our customers is our priority. And tools used in regulatory sandbox are active consultation, of course. We also use proportionality principle, and we can test some new models which do not have any regulations yet in the live environment. And after the testing, we can provide some guidelines or even laws, or we can also collaborate with other institutions in the market. And I will share a few examples of few success stories already established in our sandbox. So first, last year we have tested P2P platform for insurance. This is quite new business model in our jurisdiction, and the result was that after the testing, Bank of Lithuania has issued the guidelines for such business models. So after the testing, we have one P2P insurance platform in the market, but we hope that the guidelines issue will boost this market, and probably we will see more P2P insurance platforms joining the market. We also have had a technological sandbox, which invited participants from the market to explore DLT technology. And the newest development, we are currently open the new page of our sandbox by having the first global cross-border testing together with other participants from United Arab Emirates, Bahrain, Abu Dhabi, Kazakhstan, and Bermuda. We are testing a Polish platform to create regulatory templates. The platform is called Atoma Matter, and we have choose to test possible tools for mitigate ESG related risk. So we have created POC model for bank and loans supervision. We also have created POC model for insurance, and we are currently exploring some model for investments. So I'm very proud of this project because it shows that by entering our sandbox, the ideas can be easily join the global market. So GFIN is one of this example, and we are currently working with other European institutions. So in the future, we can also see the cross-border testing initiatives in Europe. So that was my brief introduction to our regulatory environment. Thank you. And I guess if we have no questions, we can move to other presenters.
Evelina, thank you very much. I would invite you to post the questions either in the chat box or then wait for the Q&A session. So, and now I'm very excited to hear about South African fintech ecosystem, which will be presented by Dino. Please, Dino, the floor is yours.
Thanks very much, Inga. Just shout if you cannot see the presentation.
It's fine.
Great. So we're going to have a look at the fintech landscape for South Africa, as well as the regulatory environment. First, the fintech activity in SA has been on the rise. Our study from 2019 published last year in 2020 and covered over 220 fintechs within the country. And that number is expected to grow as technology adoption increases. Payments, no big surprise, is the largest and most mature segment, making up 30% of overall fintech activity in SA. A large amount of these fintechs have been established within the last 12 years. And the second largest segment is business-to-business tech solutions, or white label solutions, mainly using AI, blockchain, and robotic processing, making up 48% of this fintech sector. The fintech sector in SA offers services already offered and provided by the traditional financial service providers, but often at a cheaper, faster manner, and also offering services to underserved customers, particularly where there's a gap market that they weren't offered products and services before. If you look at the growing ecosystem, in response to it, all financial sector regulators came together to agree on a multi-regulatory approach to fintech innovation. So in 2016, we established the Intergovernmental Fintech Working Group, which comprises of our Ministry of Finance, our National Treasury, our Conduct Regulator, our Central Bank, our Tax Authority, our Credit Regulator, our Financial Intelligence Center, and our Competition Commission. We've been told it's a world first when so many regulators have come together to facilitate responsible innovation. So responding to the ecosystem and and the development, we came up with the Innovation Hub. Our Fintech Innovation Hub was created as a vehicle to engage with the fintech ecosystem, enabling regulators to craft new policies and innovate. But what is it? Our Innovation Hub is made up of three key components. First, a regulatory guidance unit, an RGU for short. This is non-binding advice for fintech innovators to come and ask regulators. During our fintech scoping report, it was clearly identified that the ecosystem for regulation for financial innovation is quite complex. And as a startup with very limited runway, you don't have a lot of time to figure it out. And what is needed is a single point of entry to reach out all of the regulators. So we established the RGU responding to this. It's a single point of entry to reach all of the regulators and the policymaker in the Intergovernmental FinTech Working Group to ask a question. And the question can be anything related to financial technology, fintech. It can be, I want to offer a certain service. How do I fit in? So how do I navigate the landscape when it comes to regulation? It's non-binding advice. We went with this option because we wanted to get our answer from specialists within the regulators as quick as possible out to give guidance. So far, and I'll speak about it in the next slide, it's been quite successful with the majority of inquiries coming from startups. But about 80% of the time, the innovation fits within regulatory frameworks, but about 20% of the time it doesn't. This is when the innovation is so unique, so forward-thinking, that the frameworks don't cater for it or don't sufficiently cater for it. Square peg in a round hole is an analogy often described. This is where we also have a regulatory sandbox. It's not an incubator, but it's an environment to test your product on live customers to show the regulators that the benefits outweigh the risks. There is the possibility to get exemption from the lead regulator if you are accepted in the sandbox. Some criteria that we look at to be accepted into the sandbox is innovation, customer benefit as well, like Lithuania, ready to test or close to ready to test the product, not an idea still up in the cloud, as well as benefit which is directly linked to the regulator's mandate. So there are some things which we look at is driving financial inclusion, financial access, increasing competition. These are the lenses that we apply to the applicants, and I'll chat about it in the next slide, how many applicants that we have to date and a few of the examples. And then the third key component of the Innovation Hub is our Innovation Accelerator, where the regulatory guidance units and the sandbox inquirers come to us to ask us questions or to apply to be in the sandbox to challenge the status quo and frameworks. The Innovation Accelerator is when us as regulators are exploring topics of interest that we want to accelerate our understanding and our positioning of this. And a few examples of this, which I will speak about in the next slide, is crypto assets, a data portal to collect fintech innovation, alternative data, alternative lending, platform business models, CBDC. These are all examples that we have in the Innovation Accelerator. And then there's a fourth component which isn't directly involved in the Innovation Hub, which is the internal innovation function, which each regulator would be driving, which is focused to their mandates. So if we have a look at the Innovation Hub, we've got 7 key areas that serve as a basis for collaboration with the fintech ecosystem. We've split up into verticals like payments, lending, challenger banks, savings and deposits, insurtech, investments in capital markets, and white label business-to-business solutions. There's a whole bunch of subcategories that we have under there, and this table is innovating too all the time. But we engage and we partner with multiple stakeholders in the ecosystem, and I'll speak about them now. If we have a look at the first piece is around regulators and policymakers, local regulators via the Intergovernmental Fintech Working Group, as well as international regulators and intergovernmental agencies are all part of our ecosystem, as well as startups. We engage often with them through the Innovation Hub, explain what we do, explain the tools that they have in their toolbox, and they are a key component in the ecosystem, followed up by incumbents, established financial firms such as the large banks, big techs in South African content is the telcos, the likes of Vodacom and MTN, are part of our fintech ecosystem. And then there's the venture funds, incubators and accelerators. We do have local, obviously, venture funds, as well as incubators and accelerators. We engage with them frequently, as well as international counterparts. And then there's the academic institutions, such as the likes of UCT, VIT, and UJ, part of our ecosystem, and they plug into the work that we do. And then there's the international institutions, such as the Oxfords and the Cambridges. All of this comes together, and they contribute to our research, are involved in our hackathons and our knowledge sharing platforms. Just to chat briefly about our regulatory guidance unit, launched last year. We have handled over 100 queries. Again, no big surprise. Biggest category of inquiries coming through is payments, followed up by investments and lending. And about 2/3 of the time, the inquiries are coming from startups who are not operational. So it's serving a key need when it comes to guidance, and as quick as possible at steer where they fit in and what is applicable to them. And if we unpack payments a bit further, crypto payments, cross-border payments, third-party providers, and closed-loop wallets are dominant when it comes to inquiries that the RGU receives regarding payments. If we have a look at the sandbox, our sandbox was opened last year in May for the first time, for the first cohort. We received 52 applications into the sandbox. Of those, majority again was from payments and crypto assets, filled up the lion's share of the segment applicants. Of that, 10 were shortlisted, and 10 are in contracting and testing phase. We earmarked 6 months for the testing phase, but it is case by case dependent. If we have a look at the categories, there are crypto, there's payments, lending, banking, index insurance, where satellites are used to gauge moisture on farms throughout the country, and investments. Index insurance, there were 2 cases. For index insurance, the testing phase is slightly longer, but this again is because of the growing phase and just the nature of the applicant. 7 are currently testing, and there's a small amount which is about to begin testing. If we have a look at our Innovation Accelerator, we've prioritized certain projects that us as regulators are driving through the Intergovernmental Fintech Working Group, such as our CBDC, crypto assets, big tech in fintech, regtech, subtech, open banking, open finance, non-traditional data, fintech digital platforms, and fintech landscaping, the database. These are all current projects in our Innovation Accelerator. Thank you very much for the time. If there are any questions, just please post them in the chat and we will get to them at the end of the sessions. So thank you very much.
Thank you so much, Dino. And I hand over to you the co-moderators functions, and I'd like you to invite now the South African companies to tell us about their success stories.
Great, thanks for that. So first up, we have got Easy Equities, Charles Savage. He's the Chief Executive Officer who's going to be speaking about their innovative offering. Charles, over to you today.
Cool, thanks everyone. It's a real pleasure and privilege to be able to present to you this morning. Can you all see my presentation?
Yes.
Great, so 8 minutes is not long, so I'm going to get to it. Easy Equities is a subsidiary of Purple Group, and Purple Group is listed on the Johannesburg Stock Exchange under the financial services sector. It's 70% owned by the Purple Group and 30% owned by Sanlam, Sanlam being the largest life insurance business on the African continent. This quote is my favorite and really was the inspiration for Easy Equities back in 2014. And I think you can all agree that the ownership economy could create radical benefits all around the world. When you look at this slide, you can see that there are less people than you would expect that own shares in their own economies. And whilst as a South African business, we felt that the problem was more pertinent for us to solve here in South Africa, our aspirations were always that if we solved it here, we could go and solve it elsewhere. Even the most advanced countries in the world have still got relatively low participation rates. So Australia being the number one at 36% of their citizens own shares in their economy, if you like. I've been in financial services and specifically stockbroking for 20 years. And so for somebody who had failed for so long at driving the democratization of share ownership, we needed to, whilst we wanted to do this, we realized that we needed to do it in a completely new way. And so we focused on fundamentally understanding the friction points that were preventing South Africans from going on and owning shares. Because the one thing that always resonated with me, it didn't matter who I was speaking to about whether and where they came from, what their academic background was, whether what their demographic background on as well. The simple question that if I'd asked them, do you want to own shares in the companies that you spend your money on? The answer was always overwhelmingly yes. But as somebody who had been in stockbroking for so long, I think we'd lost sight of the friction points that were preventing people from going on and owning shares. I headed up technology for many years, and I remember that when we built functionality to service our customers, I used to sit with traders on trading desks, the most sophisticated of users, and ask them what we wanted to, what we should develop. And so in dedicating ourselves to creating an easy platform for people to go on and own shares, we found that there were three primary friction points that we needed to address. And if we couldn't solve them, there would be no reason for us to launch the business. The first was that everywhere you looked in the industry, there were layers of minimums, minimum investment values, minimum levels of capital that you needed to commit, minimum monthly fees, minimum trading costs. And when you stacked up all of those minimums, you actually excluded 95% of the market opportunity. And so it wasn't surprising that most countries had less than 5% participation. The second friction point that we identified, which could have struck us as probably the biggest opportunity, but wasn't one that we had any foresight on, was the fact that share prices themselves create an affordability issue. I mean, at the extreme case, you've got Berkshire Hathaway as a $200,000 stock, but here back at home, our largest stock value is Naspers, and it's a 3,000 Rand stock. And very few South Africans could go and buy a 3,000 Rand stock. And yet the stocks that South Africans wanted to own, and in fact the stocks that people all around the world want to own, are typically the stocks that are more unaffordable. And so we found the solution in America. The US has had fractional shares for over 100 years since the NYSE was launched. But no one at the time had ever seen the benefit of digitizing access to fractional shares. And so we were the first in the world to fractionalize shares through a digital process. And in South Africa, we copyrighted and patented the process. And so we've got the right to fractionalize not just shares, but all securities. And we've gone on to do it not just for listed shares, but for unlisted shares as well. The third friction point that we need to eliminate was that the presentation of these products and services was very sophisticated. If I drew an analogy to another industry, it would like be putting a first-time pilot in the cockpit of a Boeing. That's what we were doing as financial services practitioners. We were surrounding people with multi-screens, red and green, graphs and charts, and a language that made it intimidating and difficult to navigate. And so for us, it became imperative for us to ensure that we built a user interface that appealed to 12-year-olds. And our guide on 12 was simply Warren Buffett. He said his biggest investment mistake was that he had started too late in life, and he was 11. So we thought we'd start at 12-year-olds and create an interface that was comfortable for them. And also in recognizing that for all of us, for many of us, our first exploration of investing, we were all 12-year-olds. We'd all, waited too long to take up the activity. Once we'd understood the friction points, we needed to create the enablers that would hopefully create the growth in our business. We were a small business with limited balance sheet and certainly even less marketing capital. And so what we had to do is create strategies that we thought would become exponential drivers for our growth into the future. And we sort of stole from three superpowers, if you like, at the time. The first was that we recognized that in Amazon, that book reviews and share recommendations weren't that far apart. When I found myself in social circles, the first question people ask me is, what shares should I buy? And so we wanted to ensure that we created an environment that gave you, if you like, share reviews in replacement for book reviews and made it very easy for you to identify the first share that you wanted to own. In Uber, the challenge was that we needed to give everyone their own private broker, in the same way that Uber had given everyone their own private driver. And specifically, the key challenge that came from Uber for us was to ensure that the $1 million investor or the $1 million investor had access to the same products and services as the $1 investor. We wanted to ensure that there was absolutely no differentiation in the service offering for the wealthy investors versus the low value investors. And for us, we almost felt that as financial services practitioners, it was our job to create wealth and to enable wealth for the lowest value of customers. And so everything we did, we needed to ensure that it was available to the lowest value of customer. And then finally, in social media, we recognized that if we could turn our customers into loyal fans, if we could take investing out of the closet and encourage people to share their experiences, they could become the centers of influence for our growth. And so our whole platform capability was built to share. So anywhere where you're engaging on the platform, the opportunity to share that experience is right at your fingertips, whether that's you're buying a stock, selling a stock, sharing a piece of research, or sharing your portfolio. And today, it's gone on to be the number one force in driving our own growth. 60% of all of our client referrals come from our customers. And there are over 500,000 South Africans that are active on social media, Facebook, Instagram, Twitter, that have created these spaces for them to share their experiences of engaging and acting on easy equities. So in the result, we established easy equities, and this is a view of what our application looks like. And we set ourselves the purpose to go and democratize all things investing, but started with the most obvious asset class being access to South African shares. Since then, we've launched into other markets, so our customers now have access to Australian shares, US shares. Before the end of the year, we'll add European and UK shares, and then we're going to turn our attention to some of the Asian markets, and essentially making it easy for our customer to get access to the best investment opportunities all around the world. In democratizing anything, we realized very soon, or right at the start, that if you were going to democratize anything, you would probably do it faster in partnership than doing it alone. And so we built our platform capability to partner into other players that we believed were going to want to play in this space. And for two reasons. One, they were going to want to move their products and services into the financial services space. But in the case of banks, we believed that as fintechs grew up and disrupted their market segment, banks would see it as an opportunity to create a defense mechanism against those new fintechs if we gave them the opportunity to partner us. So these are examples of two of the banks that we've partnered in South Africa. Capitec, the largest retail bank in the country and the most disruptive business to emerge in the last decade and a half. And more recently, which was only announced last week, our partnership with Discovery Bank, the largest life insurer, or the most innovative life insurer to come out of this country in the last decade, who recently entered the digital banking space. And this is just an example of what our platform experience can feel like inside that banking, inside the banking application. The important thing to note here is that from start to finish, in the case of Discovery Bank, the entire process from contract to implementation will take less than 6 months. And so we can put our services inside the rails of other partners very quickly. We think that's a unique capability in that we've looked all around the world for fintechs that are capable of doing it. And for the large part, they've built their businesses to be B2C only. And very few of them, in fact, none that we've recognized have been able to partner at the same rate that we have. This is an example of what we could look like inside a telco. We've in fact signed the one at the bottom, Telkom, and we'll be launching inside Telkom early next year. And for us, it's important to access distribution for a couple of reasons. One, it gives us access to customers at a very low rate. But two, it meaningfully binds us and combines our functionality stack with fintech players that are playing in other spaces. And in the result, you get a 1 + 1 effect, which isn't 2. It's hopefully multiples of 2. And so because we don't, for example, sit at a payments layer, but there's so much rich data that we could utilize from that payments layer to enrich the investment services, think things like Roundup or Swipe for Shares, we want to partner other fintechs to create a more meaningful ecosystem. And I think the future of fintech is going to be one through partnership, and that the next big bank or global bank is going to be a bank that's built through partnership and not one that is standalone. Our breadth of offering is also unique, so we realize that in order to keep customers for a long time, i.e. throughout their financial lives, you couldn't just offer them access to do-it-yourself investment services. For one, we've grown into other regions, so we launched in Australia a year ago, and we'll be launching into East Africa within the next 12 months, and hopefully Eastern Europe thereafter. But two, we've also built other products, services and capabilities. This is an example of our managed portfolios and mutual funds that you can buy on the platform. The managed portfolios are run by professional asset managers. They're independent asset managers, and our customers can buy those portfolios. And for us, it's a co-pilot relationship where we believe the old world of asset management is a pilot and passenger. The passenger sits at the back, the door's locked, and you've got no access to where your investments are being flown. We think the future of asset management looks more like this, where you sit alongside the pilot and take controls from time to time and get to ask questions about where your investments are being flown. In addition to that, we recognize that not everybody understands how to match the right assets, their financial goals with the right asset groups. And so we built Murphy, which is our robo-advisor, which essentially understands your goals and aspirations, the time horizon and the risk profile, and then matches you to the right set of assets, again, on the same platform capability. ETFs have been by far the fastest growing segment for retail investors. And so we built a platform that made it easy to pick the right ETFs. As the landscape gets crowded, choice paralyzes the customer. And so we've created a platform that makes it really easy to compare and make the right choice around which ETFs will suit you. And finally, we've just entered the crowdfunding space where a year ago, we entered the crowdfunding space and used our platform capability to crowdfund access to large-scale residential development, a first of its kind in South Africa. And the platform capability solves for two problems. One, that it gives the small investor access to large-scale developments that they would never be able to afford. But two, we create liquidity. We run quarterly auctions so that people who need to access liquidity or liquidate their portfolios can do so, benefiting from our access to customers. And then finally, we built an institutional platform to take our platform capability into the pension fund and retirement savings space. Same platform experience, same tech stack, just provisions differently to give access to pension funds and retirement savings in the country. How are we doing? So since launch, we've registered over 1.2 million registrations, 300,000 registrations in the last 6 months alone, and so we're averaging about 60,000 registrations a month. We've got 500,000 active investors, of which 100,000 arrived in the last 6 months, and they're managing 700,000 investment accounts. One of the things that we're most proud about is the demographic split of our customer base. When we started, 85% were male, 25% were female. Today it's 60-40, and within the next 12 months, it'll probably be 50-50. The average age of the investors is 31. Our nearest competing platform, the average age of their investors is 55. So our customers are getting younger. And we've saved South Africans over R1 billion in transaction costs alone when compared to our nearest competitor. 60% of our clients come from a referral, and we've increased retail stockbroking in South Africa on our own by over 200%. We've done 22 million trades since inception and 6.5 million in the last 6 months. 60 billion rand in notional value and 14 billion of that in the last 6 months. And so our story is one that is rapidly accelerating and growing, and the next growth markets for us will be other areas in Africa, Eastern Europe, and Asia. Thanks very much.
Thanks there, Charles, for that great presentation and overview that was succinct in the time that you had. Appreciate it. Thanks very much for that. Next up is Neil Adamson from Discovery Vitality. He's the director of the platform business development. Neil, over to you, please.
Thank you. Can you hear me?
Loud and clear, and we can see your presentation. Thanks.
Presentations. Thanks, everybody, and to echo Charles, it is an honor to be here and to chat to you guys about what we're doing with our Vitality program across the world. So we call Vitality, which is a general wellness program that's linked to Discovery Bank, Discovery Health Insurance, and Life. We call it, in terms of our global expansion program, a behavior-linked engagement program. And the reason we do that, because the program that underpins Vitality can be applied across multiple dimensions, and we'll talk a little bit about that now. And it gives us great traction in terms of increasing engagement for companies with their customers. 8 minutes isn't a huge amount of time, so I'm going to go really quick. And if you do have any questions, please feel free just to drop them on the chat. So the whole idea around Vitality program or an engagement behavior change program is to reduce risk that a particular company could incur when dealing with their clients. So if you have a look in terms of health and life insurance, we know that 4 lifestyle behaviors lead to 4 chronic conditions, which lead to 60% of the deaths worldwide. And that would be excessive alcohol, smoking, lack of physical activity, and poor diet. If we can move those out of a person's life, we can decrease the mortality rate, and people will live healthier and live longer, and that would give an insurer a much longer relationship with their clients. When you look at that equation across other industries, you can see with driving that 5 driving behaviors, and that would be acceleration, aggressive braking, rapid cornering, etc., lead to 3 driving conditions, which lead to 60% of the fatal accidents. So once again, if you can convince people to reduce their behavior around their bad driving habits, you're going to have fewer road accidents and less claims in terms of your P&C insurance model. The same does apply to everyday banking as well as to long-term savings. So the whole concept of the Vitality program, which is based on shared value and underpinned by behavioral economics, is to convince people that better actions, better activities, healthier actions, etc., are good for yourself, they're good for society, and they're good for the insurer or the bank that engages with you. So if you do then look at our global experience, we've exported Vitality to a number of markets. It's now 31. As of yesterday, we launched into Italy. We have over 150 program partners. We have a very strong relationship with devices in terms of managing or tracking people's activities, heart rates, etc. And then we track around about 100 million devices or activities per month. You can see in this slide, we've partnered with large insurance companies, Manulife, John Hancock in the US, Generali in Europe, as well as ASR in Holland. We have our own subsidiary company, Vitality Insurance in the UK, and then a very strong relationship with Ping An in China, AIA in Asia, and Sumitomo Life. So the program is up and running and deployed and implemented in a number of markets across the world. Just to give you a quick idea in terms of our ability to quickly reskin the Vitality app across multiple regions. You can see it's all multi-language. Generali Germany is a German app, Korea it's a Korean app, etc. And each program then is managed and marketed by the local insurance company in accordance with their wishes and how they would like to expose the program to their client base. So very, very configurable and easily implementable into multiple regions. You can also see in the bottom, we have an employee wellness program in the US. We have a number of large clients across that, busy implementing that for Accenture across the globe as a employee wellness program that's powered by Vitality. And then we've partnered with companies like Best Buy and Apple across the US region to implement programs that do work outside of the insurance industry. Okay, so when we start to look at customer expectations, we start to find, especially now with COVID, that clients and consumers expect all brands to provide some sort of a wellness offering, to take care of them, to act responsibly, and to understand your client. And what that resonated with us was around, well, we run a Vitality program predominantly in the insurance industry, but what if we could move that into other industries? We have a very strong, probably one of a kind behavior change platform, which gives us the ability to really bake in these features, but offer them in a way that's not only applicable to insurance markets. So if you could enable your customers to achieve their personal outcomes, rather than a standard reward program that every 20 minutes you spend on the phone, I'll give you 1 point, or every $5 you spend in my shop, you'll get, potentially a free coffee at the end of the year. You could really engage with your customers to achieve their personal outcomes. What are their goals? What are they looking to do to improve their life, etc. You could grow existing revenue streams as well as create new revenue streams. And you really then become a natural part of multiple daily moments in your customer's life. And what we found with Vitality is that we have an app that after 6 months is still 80 to 90% engaged on, and we're still getting 20 to 30 logins a month, which is substantially larger than the large portion, than the majority of your apps you have currently installed on your phone. And then what we do find is Vitality across the world, both in Japan and Korea, in the US, it transforms that brand that we partner with. So if you have a look at AIA, they call themselves the healthy life insurance company now, and they really do take the ability to implement a program that resonates with their members and then transform their brand. So how do we do this? I mean, I think those of you who understand what the Vitality program is across the world will understand it's relatively simple. Really what we do is we create a program which allows us to assess your state in terms of understanding your behavior that we're looking at influencing. We then look at goals that we can set you. So in terms of a health and lifestyle goal, you can, we'll give you a goal to say complete 10,000 steps a day for 5 days, meditate, etc. And then what we do is we track that and we link into all the wearables that are out there, Garmin, Fitbit, Samsung, Sunto, etc. Apple, a very strong relationship with Apple. We track that and then ultimately we reward you. And if you have a look at the concepts of behavioral science and behavioral economics, it's the incentivization mechanism which really does provide the hook and keeps the engagement going. But you can see in the middle there, we can set up a program for telcos, we can set up a program for health and wellness oriented companies, lifestyle habits, as well as banking and financial. And Charles spoke a little bit about the Discovery Bank. Vitality is very, very deeply integrated into the Discovery Bank, and does it does term itself as the world's first behavior change-oriented bank, and it does set you financial goals and it rewards you accordingly. So just talk a little bit about the behavioral economics and actuarial science, which we've baked in over the last 20 years. Really what we do is we understand that people are typically overconfident about their current state. Everybody is an above average driver. Everybody thinks they're much healthier than they really are. Everybody thinks they're probably wealthier than they really are. We build a lot of personalization into that. And then in terms of setting goals, you know, we understand the concepts of habitual loops. If you do something 10 times, it then starts to form a habit. So we try and work through goals that would allow you to constantly engage with the program. So therefore we need intelligent and personalized goals. We also need them to be adaptively more difficult. So if you can easily achieve something in the first week, we can increase that difficulty the next week, etc. And then in terms of rewards and tracking, instant gratification, hyperbolic discount, loss aversion, these are key human behavior traits. People don't want to wait for the reward. So this idea of a free coffee a week, simply for meeting a goal of 900 exercise points is hugely powerful. The program we have with Apple around, we'll give you a free Apple Watch. If you meet your goals, you keep it free. If you don't meet your goals, you need to pay that monthly installment. And that's not a huge amount of money, but the concept of loss aversion comes in. Somebody would rather exercise at the middle of the night, 20 minutes before 12, to make sure they don't have to pay that $20 back for their Apple Watch. So we understand these ideas and human behavior really, really well, and we build those into the program to make sure that people constantly engage with the program. And I think that's one of the most important points, is people engage with the program. And once you've got somebody engaging with your app, 18, 20 times a month, you can really start to promote other products. You can start to build a relationship with them and make them aware as to what your company does and how it does it, etc. In terms of technology, we built the behavior change platform from the ground up. It really is built on new internet technologies and a modern internet architecture. We work with clients such as Generali, Sumitomo Life, AIA. These are 100-year-old companies that have an extremely conservative approach towards security and managing their client data properly. So we really have a huge amount of focus on that. In terms of running at 99.9%, we run for 30 markets now on a software as a service basis with an uptime of 99.95%, etc. And really the platform then has baked in security and integration, very, very configurable. We understand that every country has a different idea as to what constitutes fitness, what constitutes obesity, what are acceptable cholesterol levels, what are acceptable blood sugar levels, etc. So all of that information is configured according to the client's requirements or to the local market's requirements. And then we've got a very powerful data exchange where we can very quickly integrate with either third-party apps. We integrate with a number of sleep and meditation apps, nutrition apps, smoking cessation apps, as well as device partners, Fitbit, Garmin, Samsung, Apple, etc. So the platform then gives us the ability to very quickly move into a country. We've implemented in about 15 countries in the last 18 months. So they run parallel, and it's a relatively standardized process in terms of understanding how your client is going to be implemented, what your configuration requirements are, and what we do. So moving out of pure wellness, Discovery has absolutely bought into behavior change in the financial industry, and we've got programs that really are oriented towards making people more financially responsible, more financially accountable. And when you link the two, we've got some very strong research that basically says active and healthy people make better clients all around. They earn more, they spend more, they're more financially stable, they're more financially astute, and really it is a win-win situation across the board. We started looking at sustainability programs. We're in fact running a pilot now. We're busy installing electricity meters into houses in South Africa to understand electricity usage. And really we can create programs about encouraging people to be more aware around environmentally, sustainable programs or behaviors. Do you use plastic bags every time you go shopping? We can hook into retailers. If you're buying your plastic packets, then you lose points. If there's no plastic packets on your till slip, we can give you points. We've integrated this into driving telematics devices into vehicles here in the UK as well as in the Netherlands with Avis from a car rental point of view, where your driving gets tracked and we reward you for it. One of the key points with Vitality is we never punish you. We always reward you for good behavior. So you're not going to have a claim refuted if you're caught driving badly, but you do get rewarded and you get substantial fuel discounts, or you get discounts on your insurance if you meet your driving goals. And then we look at client-driven programs. We're working quite closely with a telco in the Middle East to understand how we would implement a telco-oriented program in that environment. Some of our other opportunities we've looked at, we have a retailer program where we take the traditional rewards program, which is bland and really doesn't work anymore, and we adapt that to being much more lifestyle oriented, to allowing the retailer to engage in a more meaningful way with their shoppers, and for rewarding them for shopping in that environment. We've done programs with gyms, telcos. That SK Telecom program was launched 2 years ago. We went up to 1.5 million members in the space of 4 months. Very, very successful. It was also voted as the most innovative health app in Korea at the time for that year. So you look at the program and then people say, well, people who are fit or people who drive well will engage with the program. But what we find across the board is with the right incentivations, you do target people who need to change, people who understand that potentially, their behavior in a certain way is not conducive towards a good lifestyle and is not going to help them live a long and happy life. The rewards motivated one is very interesting. It's amazing how people will get active or complete goals purely for a coffee at the end of the week, and it's incredible how that does drive people. And then yes, it very much attracts people who do already behave in the right way and they know they can benefit from their positive behaviors. Some quick stats around here. We spoke a little bit about people signing up and staying. 84% of our members continue engaging in the program after the first 3 months. That's a very, very high stat in comparison to the large majority of apps out there. People do find the program is very compelling. They really like to share it. Discovery and Vitality, I think, must be one of the most talked about companies here in South Africa on weekend get-togethers, people comparing their points, etc. You get the ability to extend that app into other components of your business. And we know that people are 4 times more likely to buy more than one product from the company offering the program. And for instance, when we offered the healthy food program and that became available, we had a 16% increase in healthy food purchases from our local retailers here and also globally. And then really people do engage and change their behavior. And it's proven. We have a substantial number of stats. This one, for instance, was done by the RAND group with our Apple program, where we had an increase in activity for high-risk groups of over 200% in the US, 160% in the UK, and 109% in South Africa. So the program certainly does work. We understand that what it takes to motivate people, to incentivize them, and to get them behaving in a way that reduces the risk for the company that offers the program.
Sorry, Neil, I'd like to quickly come in here. I'm just very conscious of the time and thinking whether we will manage to hear everyone. So if it's possible, maybe we can just go very quickly through everything that you have. Yes, thank you.
I'll be another 2 minutes. This slide really does give you a quick overview as to the concept of shared value. Everybody really does benefit across people changing their behavior in a positive way. This slide reinforces what I spoke a little bit about earlier, where we spoke, we saw that the absolute huge increase in app logins across, inside the Discovery app when we implemented the program into the mobile app. And when you've got people logging into your app 18 times a month, that's a substantially high, 8 to 10 times a month, but 18 times more than they did. That really is a powerful driver to engagement. This gives you a quick idea in terms of our success in Korea, and this gives you a quick idea in terms of one of the retail programs, a retail pharmacy in the US that we implemented a while back. And I shall stop there in the interest of time. So thank you very much for giving me the opportunity to present that.
Thank you, Neil. Thanks for the great presentation. A really interesting offering there. Next up, we've got Riyad Hanslu, Head of Risk and Regulatory from Yoko. So Riyad, over to you.
Sure. I am going to try and be super quick as we go through this.
Thanks, Riyad.
Let me know if you should be able to see the screen now. Cool.
Yeah.
So I think very much aligned to what Dino has said before, around the fintech ecosystem in South Africa. The Yoko story, I guess, very much resonates with that. And that, for us, our mission has always been to enable small businesses in the best way that we know how, and do this better than a lot of our counterparts within the market. So I guess our story starts really focused around small businesses as the next frontier for financial services. I think the vast majority of small businesses in South Africa is also South Africa's largest employers, employing about 60% of the population. The truth, though, is that these businesses generally tend to be quite expensive to reach by traditional financial institutions, just based on the current business model and what the distribution looks like. As a market, the result of that means that for the most part, these merchants tend to be excluded from the formal segment. But what is exclusion, and what exactly does that mean? So I think the Yoko story really started about our core focus has been the payments acceptance in South Africa. While the vast majority of the adult population in South Africa have credit cards and bank accounts that are associated to these, there's only, well, at the stage that we started, about 8% of the population or businesses that actually had the ability to be able to accept these types of payments. What that meant is that there was a massive gap in the market for card payments acceptance, but at a more fundamental business level, meant that the types of businesses that we were dealing with were unable to accept payments, or either, and as a result, either have lost businesses, or lost the specific sale, or kept moving or kept transferring value in cash, which obviously from our perspective and a move towards the digital economy and financial inclusion more generally, this is problematic. This also then presented with a $150 million opportunity in the consumer market in South Africa, and attempt to build that. I think what we found is that obviously the power in all of these situations lies with the consumer. The consumer has the power to decide what sort of method of payment they would like to use with each of the businesses that they're dealing with. I guess our mission has been to ensure that all of the Yoko businesses and Yoko merchants have the ability to be able to accept all of these various types of payments. That the funds that are flowing or could possibly flow from a sale will continue to flow into their business. I think this is of the various makeup of each of our bases, or at least the top three: the retail segment, bars, cafes, and the health and beauty sector. But most importantly, the types of businesses that we're talking about here earn between 10,000 to 200,000 Rand in monthly turnover, which for the most part has meant that these types of businesses have been unable to access more traditional financial services, specifically on the card acceptance side of things. As I guess we've sort of progressed, we've looked at how our value proposition matches up to what's available in the market. For a card machine where we initially started as a business, you could either rent this for $40 or you could own one of ours for $50 once off. You could buy online, or you could wait for a sales rep to come to you from a bank in order to sign you up. You could sign up with us and take less than 5 minutes, or you could go through the tedious that traditional financial services providers can throw at you. And the last one, it was really around approval rates and how quickly we were able to onboard merchants, and making sure that we were able to reach everybody, because I guess at the heart of this, the real mission is around reaching the vast majority of the population that had been excluded for the most part. What this has resulted in, I guess, is a product set that has been informed by the types of merchants that we were dealing with. What initially started as card payments or pure card payments over the last year has evolved into a lot more with the move towards online sales as a result of COVID. And so throughout COVID has really enabled our ability to be able to offer other online products, so the Yoco Link, the Yoco Gateway, vouchers which are in a month with COVID starting. Our second product offering is really on the capital side, so addressing the funding needs of small businesses, how money is flowing into a lot of these merchants, which also wouldn't necessarily have been able to because of the typical issues that affect small businesses, right? So the lack of financial statements or movable assets. But what we found is that the tools that we were able to provide really provide good and valuable insights into repayments behavior that can be used to enable some of these other products and enable adequate credit scoring to facilitate capital flowing in. So what we found then is that we've been able to address a larger segment of the population, or what we like to call the blue ocean, the very small and small to micro sized businesses in South Africa make up the vast majority of the economy that have largely been unserviced by some of the traditional financial service players within the market. I guess the growth trajectory of Yoco has been, I think, one that has been really well documented. I think what started off initially with a license, a typical sort of within the existing licensing regime and funding round that was really valued, orientated around the POS service offering, increased as we've been able to build out our business up until 2018, where we built the Yoco Payments, which is currently situated in the Netherlands, our sister company that assists us in being able to process actions. Our standalone Yoco 3G card machine of other online payments products, I guess, has resulted in a year-to-date number of about 160,000 merchants, vast majority of which that have been new to card acceptance. There's also the stage at which we've been able to raise over $83 million, which is the largest funding round, SME focused fintech work in Africa, which then, we're bringing the total funding that we've received to $107 million today. So I think, looking towards the future and where we sort of see ourselves was really enabling the cash in, cash out sort of methods of payment. We currently enable the cash to flow into the Yoco ecosystem. How in the future might we be able to allow our merchants greatly and use of our product service offering, all of their financial services needs beyond just those those related to card acceptance specifically. It's also, I guess, a good point to CA for the great work that they've done, facilitating some of the discussions around how this might happen within the existing regulatory regime, and how this type of licensing might work for fintechs such as ourselves. I'll stop there. Thank you, Dino.
Dino, are you there?
Dino seems to be frozen on my side.
Yeah, I think we've lost Dino. So Inga, I think if we could perhaps move to the next presenter, which would be Clayton.
Yes, I will invite then Mr. Clayton Hayward, Chief Executive Officer of Relocation.
Hello guys, how you doing?
Over to you. Very fine, thank you.
Good, good. Let me just quickly share my screen here. And I know you guys are all tight on time, so I will not bore you with lots of detail. Can everybody see a screen yet?
Yes, all good.
Okay, excellent, excellent, guys. Thanks for inviting us today. Really appreciate being part of events like this. Myself and my co-founders are the new kids on the block in fintech in Africa. We started this business back in 2018 when we actually started a digital bank in partnership with Nedbank, and on the back of that we won several awards with Singapore Fintech Vest, with South African Reserve Bank, EcoBank Fintech Festival, etc. And what we ended up doing was pivoting our business to service banks, telcos, fintechs, because we learned so much in the process of starting a digital bank in terms of specifically compliance, scaling the technology, that we felt that there was a far bigger market for our proposition to go into a B2B focus. So in 2019, we pivoted our business and we decided to only support fintechs, telcos, banks, governments, etc., with a financial services value proposition. And really what it's about is democratizing fintech. And you know, when people try and start a fintech proposition, they sometimes are overwhelmed with the compliance requirements or overwhelmed with the integrations. What we've done is we go out there and we enable everybody in the market to become a fintech. So it doesn't matter if you're a retailer, whether you're a telco, whether you're a bank, whether you're a startup fintech or a mature fintech. We provide this common fabric that we call Eclipse in the market. And we're very unique in the market in that we've created a ubiquitous API that sits inside of Amazon that allows everybody from an enterprise bank, and you can look at our clients like Nedbank and Telkom and MTN that have all launched propositions on the back end of Eclipse, or very small fintechs like Soulcard that just launched a proposition in the market a few weeks ago. And it's because via the single API, we allow people to do digital KYC and onboarding. We allow them to do crypto. We allow them to do virtual cards, physical cards, wallets, bank accounts, cross-border remittance, SMME propositions where we allow things like tap on glass on a smartphone. And you putting all these components together creates a very powerful ecosystem that you can very rapidly launch a product into market. So we have cases at the market at the moment where we have clients who have signed up with us and they have launched a fully consumer viable proposition within 2 months. And we've had other clients who've come in and they've launched a proposition within 3 weeks because they're only consuming 1 or 2 services. So really we find ourselves very well positioned in the market right now. I think we've closed well over 50 deals in the last year, and we have a pipeline of well over 270 deals that we're working on, and that's across the entire African continent. We now have offices in Singapore, in the Middle East, in Mauritius, in India, in the UK, in Austria, and we're really starting to see a lot of growth, and it's all about the benefits of this Eclipse API. Very low costs from a transactional point of view. We cloud native. From a compliance point of view, we really tick all the boxes. We PCI level 1 certified. So we really take all the heavy lifting out of being a fintech, and we allow you to focus on your core proposition of acquiring customers with your unique value proposition around your brand. And that's really what Ukesh is really all about. We want to be the common fabric behind every single fintech proposition out there, where nobody needs to know we exist, but when there's a fintech proposition launched and there's a press release in the market, you know that Ukesh is the technology behind it. We've got a very strong relationship with MasterCard, but we are agnostic to both banking and association. And I think we're well positioned to support any fintech in any region of the world, and we're excited about our growth prospects. Thank you very much.
Great, thanks Clayton for that really succinct overview of the offering. It was really interesting. Inga, over to you.
Thank you, Clayton, and thank you, Dino. Really exciting stories. And now we move to the Lithuanian side, and I'm pleased to invite Liudas Kanapienis, who is the co-founder and the CEO of Untitled. Liudas, over to you.
Yeah, I hope you hear me. I'm trying to.
Well, Liudas.
Do you see me as well?
Yes, I see you.
Okay. It's just it's under recording. Okay. 1 second. I'm trying to share the content, which I actually cannot do. Okay.
Liudas, may I propose then, if you can send to my email box or maybe let me see, I think I've received from your colleagues. Maybe I can send it to Dino, can help you to share.
Yeah, because just the thing is that the permission does not allow me to share the content when it's recording. So.
Okay. Liudas, would you mind if I invite then Darius?
Yes, please.
And we solve the issue with the presentation. Darius, are you ready then?
Well, I have to be.
Okay, so I'm very pleased to invite Darius Kulikauskas. He is the CEO of Pervesk and Bankera. Please, Darius, the floor is yours.
Okay, hopefully by the time I started speaking, my screen started sharing with you. Just some, I don't know, audio confirmation from another side would be nice. Can you see my screen?
Yes, that is all good.
Okay, great. So thanks to all the previous speakers and presenters, really interesting stuff. It is really nice to learn that we share quite a few things despite, the geographical, let's say distance, not proximity this time. Yeah, it is kind of a case in point because we at Bankera, we focus on digital businesses, so on digital first and digital only businesses. Of course, we do all the things I think that I've heard already. We do white label our solution. We do allow to build around our API. We do support our customers in terms of getting a license, getting an authorization to work in European Union. However, we are also after the retail market, and my presentation is going to focus on that. It's going to be really quick. I have only 7 slides, so for the allocated 8 minutes, I think I can do less than a minute per slide, except for this, of course, brief introduction. And yeah, so as Bankera, we've originated from a virtual currency exchange, and it was one of the earlier ones. It is still around. It is providing services to well over 1 million of registered users. But as an operators of virtual currency exchange, we've learned that there's really little competence and human capital at established or entrenched financial institutions to work with digital-only industries. So the industries that don't have any physical presence, that don't sell any physical goods, that don't sell any services that has ties to physical world. And the lack of these competences cannot be compensated by technology, by innovative solutions only. You need also to have human capital. So at Bankera, we've started a financial service provider, a payment service provider, which is focusing on building tools around the human capital that is able to deal with digital industries and digital-only services. So what we offer a payment account, a European payment account, and an ability to order card with it. We are principal members of these organizations, so no intermediaries there. We, of course, also offer BIN sponsorships for our corporate customers, but for the simpler solutions, for example, if you are a South African medium or small business and are looking to access European market, and if settling or transacting with European counterparts is a large can be a large amount on your balance sheet. Well, we are probably a very good way to start to cutting on transaction times and of course on your bills. As I've said, our cards are issued from this organization. We are technically also a principal member of MasterCard organization, but we decided to focus first on the acquiring part before offering additional issuing offers, because more or less the coverage is already there with only one membership in the organization. So for now, the most important probably part is that this card that we can offer you is issued without any intermediaries, and it is based on our principal membership. And why I'm stressing this is that from our own experience and the example that I've mentioned with virtual currency exchange operator is that when companies have the risk appetite and they build that risk appetite around the backs of others, they are not completely in control of their risk appetite. And what this usually translates to is that once their scale reaches a certain level and starts to compete with someone who is sponsoring them, they usually have to solve this problem of de-risking, and most of the time they either go out of a very high risk market, and all the digital industries unfortunately are still viewed as high risk industries. Mainly because there's not enough human capital to understand that, and all the important positions are still filled with people with the backgrounds in traditional finance and traditional industries, and of course it's not a very easy task to get yourself into all the digital industries. So we are offering this sort of a guarantee that everything is controlled by people who are heavily invested in that industry and are not backing out of it. Our cards are, as a default option, delivered by post. They are shipped free of charge. Of course, there are priority shipping options available, but this is true to our account holders, and we offer the same service to the ones that are willing to go with our white label solution. We have both plastic and virtual cards. We have no limits on how many cards you can tie to a single account, and the number of cards issued does not change the pricing structure. So basically all the fees are the same for each card. It does not increase, and so on. So it is, I know we have quite a few success stories with companies operating in digital industries that require quite a few cards for testing their products when they're launching in new markets. I don't know, for example, without revealing any names, if you're testing, a scooter rental business in Berlin, and you need like a different payment card for your testers every day, you will probably have a hard time arranging that with a conservative traditional bank. With our services, it's just, a few clicks of the button, and you can just open and close those cards instantly. The pricing is really competitive. Without digging into into any details, I can just simply say that we base our business model on certain scale and on certain access to the industries that are out of reach from other market players. So this allows us to be very competitive and, of course, to offer very competitive prices to our customers. And a few more relevant features that is probably relevant in this context is that our services are multilingual. So we have support and KYC and AML staff that can understand multiple languages. So all the major languages of the world are supported, including Lithuanian. So being Lithuanian, we get this privilege to include our language amongst English and others. We do have mobile app. So for now, our mobile app is not built to be white labeled, but we offer all the technical SDKs and everything to build your own around our financial engine. We do have global coverage, so basically our accounts, our payments, our cards, they work everywhere, and unless you are in a place which sanctions European Union as an economic union. So I don't know, maybe hostile nations towards European Union might be the ones, but other than that, it's basically everywhere where Visa is accepted, everywhere where payments are done through conventional rails, you will find it easy to use our services. And of course, we do support mass payments. We allow controlling our accounts via APIs, even if you are not a white label customer, but you only need a payment account. You can integrate that payment account with your accounting software, with your customer relationship management software, and basically automate quite a few tasks there. So that's pretty much it from me. Hopefully I managed to squeeze in the allocated time.
Darius, thank you. Thank you very much for your interesting presentation. And now I'd like to see with Dino. Dino, have you managed to get Ludas's presentation?
I just downloading, Inga.
Okay, so Ludas, if you don't mind, then we could quickly go and ask Anton to give his presentation, and we leave yours as the cherry on the cake for the.
Sure, let's go for it. Let's go for it.
Thank you. So Anton Zuyev, he is the head of business development and sales at Forbes and Fininbox. Anton, over to you then. Anton, I think you are still muted.
Yes, I'm here. Can you hear me?
Yes, now it's good.
Good.
Go ahead.
Yes, thank you, Inga, for the introduction. So I'm happy to take over. Sharing my presentation. Could you please confirm that you see the screen?
Yes, all good.
Right. So my name is Anton Zuyev. I'm representing Forbes Group, and I'd like to also thank the ambassador for the introduction and connecting South African fintech with the Lithuanian fintech ecosystem. Also, Liutauras and Evelina for introducing the general ecosystem and the possibilities of licensing. So if you are interested in Lithuania as a gateway to European Union, and how can Lithuania aid in scaling your fintech or your financial services, then with my presentation, I'd like to address more on the technical part, on the platform part. How can you actually achieve your goals in Lithuania and in the European Union? So first of all, introducing Forbis Group. The main company in the group is Forbis, which has close to 25 years of experience in developing core banking software for large multinational commercial banks in Lithuania, in European Union, and also other non-EU countries. So of course, we have ISO certificates. We need to comply with international standards and industry best practice when we deliver mission-critical software and functionalities to regulated entities in Lithuania and also by the European Central Bank. And we focus very much on information security, on the quality of services, and the cybersecurity of our developments. So 6 years ago now, actually, as Liutauras introduced in his presentation, the Bank of Lithuania's initiative with the Ministry of Finance of Lithuania kickstarted a fintech boom in Lithuania, and us taking note of this new wave of fintech, which was coming to Lithuania, we established a new enterprise called Fininbox, which provides a cloud-native full-stack banking platform for new financial institutions who are planning to license in Lithuania or anywhere else in the European Union and take advantage of complete banking functionality and platform in order to scale their services in the EU. So with Fininbox providing a complete banking core banking software as a service, we also have clients who have already their own existing core banking functionality, but they still want to access Bank of Lithuania Central Link payment system in order to transact in the European Union. So for that, we also have a dedicated SEPA gateway as a service, which is API based. So if you have partners or companies, financial institutions willing to access European payment area, but not willing to obviously change their existing tech stack, then we can simply give out the APIs and make that integration with Central Bank of Lithuania seamless and as convenient as possible. And the third company in our group is Contomobile, which is our own licensed regulated entity, which has the Bank of Lithuania's issued electronic money institution license. So it provides services to Forbis Group, of course, and also acts as a payment gateway, non-technical gateway to other financial institutions. So with Fininbox, we have a tech solution, and with Contomobile, it's more of a soft account-to-account situation where a financial institution opens an account, and we handle the transactions between the central bank and the financial institution, which can be regulated in the EU or outside of it. So it's more of a correspondent relationship that we build and offer with Contomobile. But for the purposes of this presentation, I would like to focus more on Forbis and Fininbox. So who are our customers? So we work with different kinds. We have banks, electronic money institutions, credit unions, and also niche fintech companies like currency exchange providers, consumer payday loan companies, and so on. So in general, across the group, Fininbox and Forbis, we have 30 plus financial institutions who range from early stage fintech startups who are just licensed or in the process of getting the license to large commercial banks who have billions in assets and use our complete tech stack platform in order to service private individuals or large corporates. So, of course, we can tailor to any kind of financial institution, whether we can install our solution on-prem, or we can offer a cloud-native, fully managed cloud solution. So in that way, the financial institution doesn't have to worry about system administration, product configuration. It just focuses on delivery of services and relationship management. Onto our solution, our tech stack. So the main key point here is that giving our banking pedigree and banking experience is that we have a lot of banking products. So loans, deposits, collateral management, automated provisions calculation, regulatory reporting, of course, payments, FX, trade finance, guarantees, leasing, factoring, backend card issuing management, and so on. The main convenience that why we're chosen by Lithuanian fintechs and also foreign fintechs when they're starting up in Lithuania is because it's the ease of convenience and the ease of setup. We have all the mandatory and necessary integrations and localizations in Lithuania. So with Bank of Lithuania, with tax authorities, financial crime investigation units, and so on. So everything you need in the back end to roll out your services as fast as possible and go to market very fast. So to give an example, for us to set up a brand new, freshly licensed financial institution, it would take up to 1 month to do all the technical work in the cloud. The rest is happens simultaneously, and that's all primarily, paperwork, signing up with Bank of Lithuania, getting your authorizations at Centralink, SWIFT, and so on. Of course, in today's age, having APIs is pretty much essential. So we do have open banking APIs to integrate your own mobile applications or any other third-party services. We use third parties for other niche technologies that we do not develop ourselves. So, of course, as already mentioned by earlier speakers, that fintech is built on partnerships. So we are open to partnerships in Lithuania, in EU, in South Africa, and frankly, worldwide, that would enrich the customer experience and improve our value proposition. Moving on to payments, so also we support all SEPA payments, so all transactions in EU currency, SEPA credit transfers, SEPA instant transactions, they occur within 20 seconds. They are credited at the beneficiary's account, direct debit, SWIFT, as I mentioned, introduced previously SEPA gateway service via API or via account at Konto Mobile. What also separates us from our competition is that we also deliver front-end channels and interfaces for end customers, either desktop variants or white label mobile apps with customer registration, so facial recognition, ID document verification, and KYC. So finishing up, why fintechs choose us is that we offer a complete back-to-front solution, or we can offer a backend only as a service with all local integrations and localizations, reporting tools, compliance tools, etc. And give to the customer our APIs for integration with the front end customer-facing solutions. It is the compliance tools that we offer, screening, transaction screening, customer data screening and monitoring, reporting to the regulatory and authorities. The system itself is very modular and easily scalable. So we have experience where EMIs transform into banks, or we have credit unions transforming into banks. For us, this is a very straightforward process. It's a matter of system reconfiguration and not development, so minimal programming. We just enable added functionality, additional functionality, and that's it. Or we can take our services and scale them internationally, either in the Baltic region or across the EU. Another interesting point to share with you is cost sharing with other clients of Forbis and Fininbox. For example, when the regulator, Bank of Lithuania, rolls out new reporting requirements, then what we do is we analyze those requirements once, and then we split the cost across all our customer base, allowing our customers to greatly share the cost of development with other participants. And this allows us to save time when implementing and installing this new requirement across all the customer group. So basically, it's a win-win situation. So when there are minimal changes to payment systems, reporting requirements, we handle those requirements across all our customer group, and the customers only pay a fraction of that development. And last but not least, we also provide licensing assistance. Given that we are the experts of our own core banking software that we develop, once you decide to set up your fintech in Lithuania, you need to submit a lot of paperwork, and also your description of your IT system. And us being a proven and vendor with a long successful track record, we do supply all the necessary IT system descriptions, documentation, which facilitates the the acquiring of a financial institution license. So that's basically what we do in a very short time. I hope this was interesting. So maybe a couple of key takeaway points if you're planning to set up in Lithuania. So of course, do please talk to Liutauras or Evelina. But if you also would like to explore potential partnerships in Lithuania, or if you'd like us to maybe learn more about your local fintech ecosystem in South Africa, then I'm also open to that discussion. So thank you for your time.
Anton, thank you very much. And now, last but not least, I'm very pleased to welcome again Liudas. And Liudas, he's the co-founder and CEO of Ondato. And in 2020, Liudas was nominated as the Fintech Leader of the Year, presented by the Fintech Week Lithuania Awards. I'm very pleased to give you the floor. And Dina, I hope you will. Yes, I see there are slides. Please do this. And for the rest, I would ask you kindly to stay another 10 minutes so that we can hear Liudas and quickly wrap up. Thank you so much.
You see my slides now, yeah?
Yes, yes.
Okay, thanks. So yeah, I'll try to be then very quick because we are out of time already. My name is Liudas. I'm the CEO and the co-founder at Ondato. And as you can guess, we work with the compliance products. That's why I was not able to share my screen actually while recording. But now everything is set up. So yeah, let's jump in. Basically, I'm really pleased that I was invited to kick off with the Lithuanian presentations because basically the big part of our success is related to the Lithuanian success as the fintech capital in Europe now, and because of the very simple reason. We work with know your customer process handling, and we have built the whole suite and the platform for basically enabling any company to efficiently run the KYC procedures from the customer onboarding to the data validation, ongoing due diligence, case management, etc. It means that not all the banking corporate systems are as Anton mentioned before, and basically not all of them are able to really make the processes efficiently. So that's what we make happen, that the customers or our clients wouldn't need to change their existing infrastructures. But basically why we came to this, so with a very, very simple reason. The fintech sector in general and globally is really rising, and the banks are going to to digital space, and lots of the things are happening in the developments. You see that lots of the companies, even not in the financial sector, are actively participating there. And the problem we saw is that still the process efficiency on anti-money laundering process and the procedures is really bad. And the regulators are, of course, pushing harder and harder from their perspective just to secure the end customers and consumers. And lots of fines are issued every year. On the other hand, the fraud level is also increasing, and especially in the pandemic year, we saw the huge increase on the fraud activity in the digital space, and especially what touched the financial sector and the identity thefts and that kind of part. So that's where we wanted just to tackle that as the problem, like from solving both sides, like enabling all the digital activity and digital onboarding parts and that kind of field, but also to make sure that the process are compliant with the regulations and are efficient from the financial institution side. And that's where we created our operating system or the platform that we call the operating system today. Of course, we had to start from somewhere, and for us, that was a very obvious thing at that day to start with just the digital onboarding products. Because the legal framework was there, it was like very deeply described how the onboarding and the digital onboarding has to be made within the financial institutions. So for us, that was a really good entry point and developing that part. However, keeping always the mission of turning the compliance itself into the business benefit. And that's where we understood that it will be not enough just to have one or other type of process like ID verification or that kind of field, but to be able to cover all of the related processes with there. And basically what we do is that we make all the related processes with the compliance, and especially from the KYC perspective, as efficient as possible and as automated as possible, just to make sure that our clients would focus on the business development and everything rest would be managed by our system. And now, of course, we are the experts in the digital identity space with the background screening, due diligence, ongoing due diligence, all the data monitoring related with the customer data, and of course the risk scoring of the KYC and the case management itself, including the reporting to the regulators. Currently, we're set it up in the 6 locations, 3 of them being in Lithuania and rest in other European countries, and with some achievements already have in our life. Some of them are more important for us, as the company, and of course, some of them are really beneficial for us, or especially me as a person. I was already mentioned that I was also selected as the fintech leader here in Lithuania, and the company was selected as the fintech leader and the fintech enabler of Lithuania. Today, we have more than 250 clients from the financial. Like from the traditional banks to the fintechs, life insurance companies, and other type of clients in 34 countries, literally from Jamaica to Japan. We're country agnostic from that perspective. So yeah, that's the team that's, the core team that I've started the company with. Today, we are more than 180 people within the company. Most of them are being located here in Lithuania. You will already told about the talent pool and talent possibilities. And of course, we're inviting all the foreign companies to develop the things there. So for sure, we are developing everything ourselves as well. Yeah, that's it. I've tried to be as quick as possible. Thank you very much for your attention. And if we will have some time for the questions, we'll be glad to answer that. If not, just find me on LinkedIn, and I will be really glad to share my thoughts on that. Thank you very much.
Thank you so much, Liudas. Oh, you were very fast to finish, and it was a really interesting presentation. Let me now quickly wrap up. I'm afraid I'm sure we're not going to have time for the questions Q&A session, but I would like to I've invited as well in the chat box to respond to the questions that we have seen during the session. And otherwise, either you can direct your question to the embassy or to Dino, and then we can connect you, or if you would have any, if you would like to connect directly with some of the companies that you have heard today, you can also just drop a mail to me or on LinkedIn. So, and thank you again for such an enriching and really interesting session. I hope that you've heard something interesting today and that you're going to benefit from this information. And ideally, we would like to see some Lithuanian companies partnering with South African counterparts here in South Africa, or vice versa, South African companies coming to Lithuania or through Lithuania to the wider EU. So that was the goal. And good luck with your work. If Dino would like to still say a word.
Yeah,
please.
Thanks, Inga, and thanks very much. Yeah, collaboration is always great, and I think this is a great opportunity for that. Just to briefly close as well, thanks very much for everyone attending. Thanks for the speakers and the great presentations. Please do reach out to us. We did a very high level of the channels on each side when it comes to the regulators. Please do make use of it. With respect to the questions, we will respond to them via email. And again, thanks very much for everyone attending today.
Thank you. Wish you a nice day. Bye-bye.
Thanks, everyone. Bye.
Thank you. Bye-bye.
Bye.
Thanks, everyone. Bye.
Thank you. Bye.
Thank you, guys. Thanks. Cheers. Bye.
Cheers. Bye.